Between March and May, the central bank has cut the repo rate by 115 basis points. As banks pass on lower loan interest to borrowers, a decline in deposit and savings account rates have followed. As a result, interest rates on fixed deposits and savings bank accounts headed south. This means that any fresh investment in FDs and recurring deposits will earn lower returns, while existing investors need not worry until their deposits come up for renewal. Investors in small savings schemes can breathe a sign of relief as National Savings Certificates and Public Provident Fund remain unchanged for 3 months, that is from July to September quarter. The rise in Consumer Price Index data for June is adding pressure on interest rates. Due to spike in the prices of certain food items, India's retail inflation in June worsened to 6.09% against 5.84% in March. This has moved real interest rates into negative territory, de-incentivizing savings lower than the inflation rate. Due to unavailability of headline inflation rate for April and May, the trend may still be uncertain. But supply chain constraints have likely put the CPI much above RBI's target of 4%. The situation is expected to ease if supply normalizes in H2 2020. Given the decline in FD rates, what are the other options for depositors? Even in these challenging times, some banks are paying a higher interest rate on FDs than major banks. This can go up to 7% on a 1-year fixed deposit. For example, IDFC First Bank is offering 7.25%, while RBL Bank is offering 7.20%. HDFC Bank, ICICI Bank and Kotak Mahindra Bank offer 5.25%, 5.15% and 4.75% respectively on their 1-year FDs. The top 2 public sector banks, the State Bank of India and Bank of Baroda, pay 5.1%. This means investors will earn a lower inflation-adjusted return or earn a negative rate given this trend. Debt funds investing in high-grade corporate bonds, banks and G-Secs can be considered over bank deposits to earn higher returns. As an alternative to fixed income options, investors can look at corporate fixed deposits or non-convertible debentures that offer a higher rate with some amount of risk. The elderly can consider the Senior Citizen Savings Scheme, PM Vaya Vandana Yojana and RBI's taxable 7.15% bonds. Depositors can also increase their allocation in gold or stable dividend investments during this time. It's prudent for investors looking for capital safety to continue with bank deposits and avoid taking long-term options in fixed income securities.